Hey everybody, this is Jim at SP500chart.com. It's about 10 till 5 on the East Coast here on September 23rd, 2014. We're going to take a look at the chart today as the markets sold down a little lower than where I thought we might find some support. So it looks like we're going to be going after yet another support level for a test. But before we get into it, let me just remind you that the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and please make investment decisions that are suitable for your personal financial situation. Some people can afford to wake up one morning and they're 200 million down in the markets. Other people, if they're $200 down, it's a whole different story. You got to know what your tolerance for risk is. And just want to remind you again that I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. So yesterday I do this fairly long video. I think it was pretty long, and I was explaining about how, I think we're going to move up from this level. I believe we're going to find support around 1990, 1992, something like that. And lo and behold, simply did not happen. If there is good news on the technical side of things, it is we see once again that that something happens when a channel breaks, even if it's a small channel. And we were in this little 5-day uptrend coming out of this about 9-day sideways to down movement. We come up at a fairly decent clip. That broke yesterday, and we saw some follow-through selling all day long. It was fairly controlled. Nothing really looks particularly frightening about it. It just looks like we just need to go down a little bit more. So, with that in mind, we did take out our little extended neckline here from what we thought might have been a Head and Shoulders top, a small one. We got underneath that neckline again. Additionally, this little somewhat semi-random support line, it's gone. We're under it. So I'm getting rid of that because a lot has happened since the things that had that line on the chart. So what I'm getting at is this. It looks to me like we are destined for a back test on this descending channel line that we broke out of a little bit more than a week ago. And that's not unusual. That's not an unexpected event. It's not the kind of thing that you say, oh my goodness, I never saw that coming. Because quite frankly, when you break a channel, a back test is something you ought to frankly be able to see coming. They don't always happen, but they often do. So I'm thinking that this looks to now be in the cards. Is the inverted Head and Shoulders pattern that we've been looking at, again, left shoulder, head, maybe right shoulder, is this thing blown out of the water? No. As a matter of fact, I don't think we really call this pattern into question. I think, let's put it this way, going by the book, literally by the book, they would say that an inverted Head and Shoulders pattern or Head and Shoulders top is invalidated when you set an extreme in the trading range that exceeds the bottom of the head or the top of the head if it's a top. So that means in order for this pattern to be invalidated, the S&P would have to sell off significantly and get down into the low 1900s. And break that. If that is the case, then I think we have to say this is not working, because not only would that invalidate the potential of the inverted head and shoulders pattern, it would validate the potential for a double top, because breaking down under 1900 would mean we would be setting a low that is lower than the one that was set the week of August 4th. And that is the textbook definition of a double top. In other words, you'll hear people say double top about 10 times for every time there is actually a double top. Okay? So I think that kind of creates a mentality where we are kind of in a cry wolf situation. A double top is a real thing, but it is not confirmed until a low is set that breaks the previous low that was the dividing point between the two tops. And as you look at this chart, I also want to remind you, it is not unusual for the second top to be a little higher than the first. Additionally, if there is a double bottom, it's not unusual for the double bottom to be a little lower and even more rounded than the first one. I'm in a stock right now that I'm hoping is in the process of making a double bottom. Because if it is, I'll be sitting pretty in 6 months to a year. Right now, it's my biggest loser. But and by the way, the moral of that story is, without telling you what the stock is, the moral of that story for me is following fundamentals. And while still doing the technical thing, I cannot make myself sell this stock because of the fundamentals involved. I just can't pull the trigger on selling, and on every dip I buy a little bit more. So as it continues to dip a little lower, a little lower, a little lower, and yet a little lower, I keep buying, and hopefully we are now in the process in that stock of making a second bottom. Okay, I'll tell you what it is. It's Arena Pharmaceuticals, ticker ARNA. Take a look at it. Do your own research. That is my biggest position. Now, we still have our neckline here, and it could be, as we set two little lows right here on the left side of this pattern, maybe we're doing the same thing here. What makes this a little bit unusual is the fact that we have before now been seeing patterns in which there is a smaller dip on the right side, but this one, it would be deeper and longer. There may be a reason for that. And again, I'm not saying that this is an inverted head and shoulders pattern at this point in time, because we haven't broken out. But the reason would be this. Because this is an upsloping neckline, it could be there's just a little bit more pent-up selling pressure on the right side of this pattern, for the simple fact that this neckline is sloping up. It's plain and simple. Because if we were to, for example, if we were to take a horizontal line and stick it right here, you can obviously see, well, actually, if you look at the area where this left shoulder formed over here, we've barely even been in that spot. So you see where the reasoning is right there. So coming into trading tomorrow, basically, this is what I'm looking for. I'm looking for a return to this top line of resistance that broke out 6 days ago. And I'm looking at that with the idea that we could very well find support at that line. So let's just keep that in mind. I put a short-term trend line on this chart yesterday right here. Obviously, we did not break above that. And by the way, that was the, quote, signal line for what we'd been doing for the past couple of, for the latter part of yesterday. I was thinking if we get over this line, then we're likely setting up the move to come back up here, but we never got over that line. So I guess you say that's another instance where the chart did work, because it didn't come above this line and then we end up under it. We never got over it. So let's hope we get a bounce here. And if we do, you might consider working off this point right here. The thing is, I really don't know where this should line up, to be honest with you. So maybe let's not worry about trying to get a channel out of this, because it's a bit ragged. Yeah, nothing really is lining up too good at this point in time. So if it doesn't line up, I'm not going to try to make it happen. This is the only line over the past 2 days that I really see that has some validity to it. There may be a support line here. Let's give that a quick check. But again, it doesn't line up extremely well. So I'm going to get rid of that as well. So guys, in the big picture, I'm still thinking inverted head and shoulders with just a little bit more extension on the right shoulder, and I would continue, frankly, to make that call until we break under this red line right here. Now you might say, but Jim, you said get under this head. That's correct. But that is the textbook definition of a broken pattern. The textbook definition says if you set a new low that is lower than the inverted head, then the pattern is invalidated. But I do think this rising trend line that has been working for, well, let's look at it on the daily chart, has been in place and working since January of 2013. This line has worked very well. If we break this line, then I think we're probably looking at what will eventually become a busted pattern. Okay, so guys, that's it for September 23rd, 2014. Still looking at the same thing we've been looking at, just with this little added twist. And let's hope this selling finds a reversal on a back test of the line that is highlighted on your chart right here. If that's the case, then it could be that tomorrow we don't trade down much lower than about 1977, maybe down another 5, possibly 6 points, if this line gives us the bounce we need. Hey, thanks for watching. Thanks for your support. And let's see if I do a little bit better job with today's video than I did with yesterday's. Thanks again.